everyone, and welcome to our YouTube channel, Moneyline with Nancy at TV. In case you're not a subscriber yet, please do subscribe. Just press the subscribe button as well as turn on the notification bell so that you can get notifications when we upload our videos. Don't also forget to subscribe and join, follow, like our other social media platforms. Of course, you're seeing it right about now. Don't also forget to share this video across your platforms. Enjoy the video. All right, welcome back to the program. Joining me now to provide expert analysis on the complex issues I mentioned earlier on is Johnson Chukwu, the Group Managing Director of Cowry Asset Management. He's an investment banker, an analyst, and a macroeconomic thinker, of course, with decades of experience in banking, asset management, and financial strategy. So he'll be helping us unpack as well as connecting the dots. Chief Johnson Chukwu, good morning. Welcome to the program.
Good morning, Chief Nancy. Good morning, hi, Chief Nancy.
How are you, sir?
I'm good, and you?
I'm doing well. I'm doing well.
Or like we see in Lagos, I'm managing.
We are managing everywhere, Chief Chukwu. We are managing. It's just everybody's managing, you know. But let's get started, and I think we'll get this conversation, you know, started with the BRICS conversation. Of course, the BRICS meeting started on Sunday. Nigeria is not a full member. We are a partner, we were told, and we do not assume the full responsibilities of full membership. I will begin by asking you, of course, we saw President Tinubu speak. The position we are in, do you think is a sweet spot for us, or what I would call a diplomatic halfway? And with President Trump threatening BRIC countries now with a 10% tariff, do you see us as being non-aligned, or perhaps this could also be opportunistic? Mr. Chukwu?
Well, Nancy, I don't see the relevance of Donald Trump's threat. Donald Trump has made so much threat that his threat is beginning to lose value. If you look at what has happened, he had declared that he was going to impose additional 10% tax on the European Union. And he also said he also shifted that tariff time to August. So what is happening today is that when he makes such pronouncements, the market takes it with a pinch of salt. You will observe that there was no movement in price of oil and gas, crude oil, which is the one that reacts most or responds most to such announcements. So in terms of imposing additional tariff on Nigeria and other BRIC countries, because he said Nigeria has aligned with those who do not support American policy, what you have to ask yourself, what is the size of Nigeria's export to US? It's just about 8% of our total exports. Total export to US about 1.5 trillion naira. Nigeria's exports to US. So I do not think, and that a lot of those exports are exempted because most of it is crude oil export. So even the tariff, the 10% tariff which is threatening, will not so much, additional 10% tariff will not so much affect our export to the US. So we have to put in the proper context. What is the size of our export to the US as it stands today? And what is the composition of that export to the US? And like I said, a large chunk of that, over 90% of that, is export of crude. And the US president has said he was exempting crude oil from any increase in tariff. But having said that, the question you asked, that is our position such a comfortable position as being on the sideline, of BRIC countries. We are not a full member of BRIC countries. I think we call it associate or so. And for me, it's one of the things I should agitate the minds of our leaders. Why are we not in the group where China is, Russia is, India is, Brazil is, even South Africa is? Why is our economy not considered such a growth economy as to be categorized as part of the emerging economies or the next tigers? That, for me, is what we should be working on. How do we transform our economy to be a growth economy that will build opportunity, that the world will see us as an investment destination and as a major player in the global international trade space.
Mr. Chukwu, so are you saying that because Mr. Trump threatens people like every day, one day, one threat, that we shouldn't take him, that we should take him for granted. How about the issue of Nigeria, of course, being a partner, a partner BRIC country?
Member.
Yes, let me put it that way. Aren't you worried about indirect trade spillovers? Because we do trade with, and members such as India and China are big trade partners for Nigeria,
Yes.
along even the value chains, I must say. Then spilling over to also what you mentioned earlier on, that you are consigned with, we should be seen as a big country like other countries such as China and India are seen. Don't you, to what extent, let me put it that way, to what extent do you think that being a partner in BRICS can help us secure perhaps infrastructure finance, energy transition finance, and all of that without, you are smiling, you know where I'm going to, I don't catch you, you know, without becoming geopolitically compromised?
Nancy, being a member of, a partner member of BRIC, or being a member of BRIC countries will not move the needle as it relates to attracting investment to the country.
Let me get
We
you
just,
again, Mr. Chukwu. Being a member or being a partner?
being a partner or even being a full member of the
Okay.
BRIC countries will not move the needle in terms of attracting investment to the country. What will attract investment to the country is the attractiveness of our economy as an investment destination in terms of return on investment, in terms of security, in terms of sectorial growth, in terms of quality of labor, in terms of the size of local market, in terms of logistic infrastructure, our ability to facilitate to export goods to other countries and import goods efficiently to our country. These are what we call the ease of doing business attributes that we need to focus on. Belonging to any group will not change anything if we do not transform your economy in terms of infrastructure supply, power supply, transport infrastructure supply, rail system, road system, security, logistics supply, the seaport, the airport, quality of labor, availability of labor, and the policy environment. Those reduction in level of corruption, these are factors that are hindering Nigeria attracting funding from other partners, other countries, or turning into a destination where foreign direct investment is flowing into. Now, see, if you look at the foreign direct investment flow into this economy, in the first 9 months of last year, which is the last report that was published by Nigerian Bureau of Statistics, it was only $253 million, $253 million of the $7.2 billion that came into the economy in the first 9 months of last year. That is a paltry amount, given that it's not even sufficient to invest in a single company that is attracting investment. So it is not who you belong to. It is how attractive you make yourself to be that will drive capital into your economy.
You know, this also took me down memory lane, because I remember here, when I did talk about BRICS at that time, we were touted as Nigeria would be such an investment destination. Even by this time, where we did so, you know, even in the year 2015 and the year 2010, and we missed it a bit to be part of BRICS, and we were now said, oh, okay, we are going to be part of MINT. Mr. Chukwu, I hope you remember what I'm saying, yes.
Yes.
The
Mexico,
Malaysias, yes,
Indonesia,
Indonesia, Nigeria, Turkey, yes.
and Turkey, yeah,
Yes,
MINT.
yes. And now we've fallen short of all of that. Where do you think we're going from here? And how did we miss it? This is historical perspective. At least I have the blessing of going back memory lane, because we were all here then, you know, and I took up government officials at that time.
I think we missed it with that kind of leadership orientation. I don't want to use say leadership, just leadership orientation. The time when we were all turning our chest, we're going to get here, we're going to do this, we're doing the Baton's government era, the country was going through a very broad transformation. We adopted the technology, GSM technology, and then we saw exponential growth in the GDP. We saw GDP growth of about 7.5% year on year, a cumulative annual growth rate about 7%, 7.5%, which we experienced in this country. And then we were private sector oriented. the country became a destination for investors. People were coming here to invest in the economy. But beyond those coming to invest in the economy, we also saw Nigerians in diaspora coming back home to be part of the transformation of their economy. But unfortunately, we lost that direction. We lost that leadership direction. And then with the last administration, we were oscillating between private sector-led government economy or public sector-led government for the first 4 years. Then before we now began to think of where we should be heading to. And then now we are now back to a private sector transformation policies, but there are other counterbalancing and overwhelmingly counterbalancing factors that are constraining the Nigeria becoming a destination for investors. We have heightened level of insecurity in the country that is keeping away investors from coming to the country. We have issues around corruption. The perception of the corruption perception in the country is quite high. That's keeping investors away from the economy. And then we have now democratized poverty. We've seen higher level of poverty, decline in purchasing power, and that is driving away. And then we saw the first 1 year of the current government as part of the transformation of the economy. We saw a very unstable foreign exchange regime that also acts as a disincentive for investors. Hopefully, we begin to see some. We look forward to some improvement in some of these statistics. But the lack of purchasing power, the heightened level of insecurity are also limiting the attractiveness of Nigeria as an investment destination. And then we need to also focus on what sector do we want to drive. One of the things Obasanjo did under his government was he drove a couple of sectors. He focused on a number of sectors. He focused on the cement industry. He transformed it. He focused on the telecommunication industry. He transformed it. He now pivoted to the agricultural sector. And then if you remember what they were doing on cassava, unfortunately, that did not fully materialize before the end of his tenure. And then there was also an effort to sell the refineries into the private sector and liberalize the midstream oil and gas sector. That also was, unfortunately, was short-lived because the next government of Yar'Adua reversed that. So we saw a government that had primary focus in sectorial development, sectorial advancement. We have not seen that subsequent to Obasanjo's government.
Let's talk about the alternative financial system that the BRICS wants to create. Talking about, of course, the currency and all of that, we should take into cognizance that this discussion on having an alternative to the US dollar has been on for a decade now, but progress is slow. What the BRICS is actually saying is that they would need, of course, the 10-nation bloc, I think, would look at an alternative financial system to enable cross-border payments. How do you see that playing out for BRICS? Bearing in mind, for example, that, you know, when I read that, was it yesterday or so, what came to my mind is PAPS, the Pan-African Card Scheme that has just been launched. It was launched, of course, at the Afro-Exim Bank annual meetings here in Abuja a few days ago, but it's been on since as a result of the integration from central banks across Africa. How do you see that playing out for BRICS nation? And I'm sure that perhaps that is also what is, you know, making President Donald Trump angry and saying we're going to slam tariffs on these nations because he doesn't want to hear any alternative to the US currency, which is a reserve currency of the world.
Well, unfortunately for Donald Trump, his brass and the confrontational attitude, approach to issues of economics will not solve the problem. The reality is that today, China is a $17 trillion economy. US is a $27 trillion economy. If you bring in India, about $4 trillion economy, you're already at 21. When you add India to China, you're already at 21. By the time you add Russia, Brazil, South Africa, you will come close to, you may not get to the 7, but you come close to the size of the US economy. So what that means is that the BRIC bloc, is enough in terms of GDP size, is enough to pose a threat to the US economy. And if they decide to develop a parallel currency that they will trade among themselves, then, and bear in mind today, the world is basically imports from China. And there is a huge trading relationship between China and the other members of BRIC countries. So the US economy, the US dominance of currency dominance may be broken. So I don't think the trade and continuous trade that Donald Trump makes is a solution to it. I think his objective is to make the US economy an attractive destination for local production. He wants to onshore production activities back in US. But it's not something that will happen overnight. He has to recognize that the timeline, and the most important thing is how is he going to make labor cheaper in US than it is in China? How is he going to make other input costs cheaper in US than in China? Luckily for them, they have gas. They can use that gas to reduce the energy cost of production in US. But labor cost is quite expensive in US. And in terms of size of the labor force, China is about 4 times the size of US population. And China has a lot more younger population than US. And then when you throw in India is about another 1.4 billion people, largely much younger in demography than the US. So these two countries alone serve as the factory of the world. If they trade with themselves, and with what Donald Trump is doing, also opening up battles fronts in several zones, also confronting the European Union. The European Union can also decide to pivot and have direct trading relationship with China and India and bypass the US dollar. So I think the US need to rethink their approach to confronting those who are developing alternative settlement system. And US did not help matters when they yanked off Russia from the SWIFT payment platform at the beginning of the Russian-Ukraine war. Because when you do that, you put a country in a position that they have to look for alternatives to survive. And you also you also signpost to other countries that you can knock them off the global payment platform because you control it, which is also driving.
How about, Mr. Chukwu, sorry for interrupting you, bringing in this perspective. You're even talking about size and human beings and all of that. Don't you also think that US is big enough, consumption-wise, than even these countries? The statistics show it, yes. Consumption-wise, they are bigger than these countries, consumption-wise, and that's why it's still the biggest economy in the world. So it's not even about your size anymore. It's what your size can produce, can manufacture. How big, what are the people in your economy producing, which will come back in a bit when we're talking about rebasing in a moment.
Nancy, consumption in any economy depends on per capita income and the distribution of income. US has one of the highest per capita income in the world.
So doesn't it trump all these things that you're saying? And that's why the US is still up there. And that's why every other country wants to bow down to them.
We're coming to that. But bear in mind that China has seen progressive increase in family wealth, household wealth. So consumption in China has also picked up. Remember when 20 years ago, China's production was entirely for the global market for export. Today, there is a lot of domestication of consumption in China. So that will continue to improve as standard of living is improving. India has also, remember China is the first country that has actually weaned this country out of, there's no person of abject poverty globally, in China. We're also seeing consistent improvement in per capita income in India. If per capita income in India rivals that of China, maybe in the next 10, 20 years, the consumption capacity of these 2.8 billion people, if 10% of 2.8 billion becomes of the same level of wealth as the average American, 10% of 2.8 billion is 280 million. America is just about 300 something million people. So 10% of India and China, when their per capita income improves further, will match and possibly overtake the entire consumption of the US because of size. Okay. And that's the beauty of size. So we should not trivialize the capacity of these economies to domesticate consumption as standard of living is improving in those countries.
Okay, let's talk about a bit of, I've not spoken to you in a while. What do you think about the IMF report, the Article 4 consultation? What's your own view about it in Nigeria? In just a minute, I had the IMF mission chief on the program yesterday, and we dissected, the report. But what's your own view?
Well, I think it was a balanced report. They presented where the government has done well in terms of reforms. They talked, in fact, their report highlighted a number of reforms: the oil and gas, the harmonization of the exchange rate, the removal of subsidy, the new tax law, among the hallmarks of some of the reforms that the government has done. But they also highlighted that Nigeria has about 31 million people living in abject poverty, that Nigeria has the highest concentration, or highest number, not concentration, highest number of people in abject poverty in the world. And they talked about what we need to do in terms of reviewing the budget, and they also say that they are not asking for an increase in what do you call it, in value-added tax, but they also think the government needs to review its projections, revenue projections, and expenditure projections. In terms of the budget framework, where we saw a 13 trillion naira in deficit budget, when fully we know that revenue projections were overly optimistic. So they made recommendations that the government should look at and see how we can adopt some of them. And in terms of budget implementation, we need to not just adopt the review of the budget, also take into cognizance some of the recommendations when we are preparing the 2026 budget.
Mr. Chukwu, the GDP rebasing is expected shortly. What's your own outlook for it? Do you expect an upward adjustment? Where we are now, I think we are number 4. We're falling to the 4th economy in Africa, if I'm not mistaken, with about $200 billion or even less than that, devaluation and all of that. But what do you think? Do you expect that upward adjustment? Or, now like this, we go the day, or we'll move to number 2? Or should we get to number 1 quickly? Because I still have a few questions to ask around that.
Okay, Nancy, normally when they say GDP rebasing, they will bring in sectors of the economy that were not previously captured or adjust their weight. The sector that we already had grown in terms of weight and adjust its weight in the computation of GDP. So you should expect that there will be an increase in the value of Nigeria's gross domestic product when the rebasing result comes out. But I don't think it's going to be anything material. The simple reason that I'm not aware of any sector we are not conscious of, or any sector that has completely transformed. Apart from the telecommunications sector, we see that currently account for about 70% of the GDP.
How about the creative industry? The informal trade, which is also huge.
The creative industry, for information, suffered a 48% shrinkage in the last quarter report in the last financial year, last fiscal year. We saw that sector suffer the most in terms of GDP contraction. So I do not see how anybody will come to me and say that they now account for a larger share of the GDP. So I can't think of, I'm not saying they are not in existence, I can't think of any sector that has transformed so materially after the last GDP rebasing. The creative industry would have been it if it had continued to grow, but unfortunately, because of a couple of constraining factors, some of which I've mentioned, that sector shrank last year by about 48%.
So, for example, you're saying it's immaterial. If they do come out and we are now number 1 in Africa, do you think that it will mask our fiscal vulnerabilities? Do you think that perhaps governments will go to town like that and begin to say, oh, Nigeria is the largest economy in Africa, like we saw during was it the Jonathan days, yes, that the economy was rebased? Do you think that it would also limit our access to perhaps concessional financing, as they will say, oh, you guys are big now, what do you need money for? Even though the World Bank has said that we're lower middle income country. Nigeria is such a country of paradoxes, you know. You are big, you are small here. You are rich, you are poor here. Which one will we take?
Nancy, if they come up with a report that says we have become the biggest economy in the world, we'll just say, What we say, in Nigerian palace, that we say, okay, you have adopted the same thing you did with unemployment. So we just say,
But don't you think that we will be bigger? Don't you
Nancy,
think?
you said if we become the
Bigger,
biggest in Africa,
yes.
yes. If we see some rational growth in our GDP, what you and I, all of us, want this economy to grow, want the economy to prosper, because if it prospers, we all prosper with it. Eh? But we do not want the Nigerian Bureau of Statistics to come and give us data that becomes suspicious. Like today, and as you know, the funny thing, you and I have discussed the issue of unemployment. Today, nobody, not international operators, not local operators, make reference to our unemployment figure because they have given us a figure that is illogical. So I'm also sure that they are aware how the market responded to the GDP, to the unemployment figure of 4.3%, which is saying that you have about the same level of unemployment that with Germany that has 4% unemployment, and you have a better unemployment than most countries. So when we have figures like that, you and I will say, no problem, we'll move on. And then we will discard that figure. And it becomes difficult for anybody to use it for decision making. And I hope, I know, I believe they wouldn't want to do anything like that. Because the one they tried, they can feel it. I mean, not even the Secretary General would tell us to come to a media house like yours and be talking about unemployment figure, because that number is completely useless. And that, I believe, we should not allow our GDP figures to be presented in such a way that even the presenter will have doubts about the figure they are presenting.
Let's talk about the central bank telling banks now to come out to their restoration plans. We do know that we have less than a year to the recapitalization exercise that the CBN has given banks. What do you think in all of this? Are there some risk that the Central Bank of Nigeria is trying to preempt? Some banks have said, of course, that they will meet the forbearance regulatory measures. Where do you see this going?
Well, I think what the central bank said that they are moving away from unorthodox to orthodox regulatory environment, which is why they said the forbearance they were granted during the COVID era, which is 5 years ago, should be unwound. But then there are recent forbearances, the forbearance as it relates to the exchange rate devaluation that made the single obligor limit of some of bank customers to be overshot as a result of the valuation of the foreign currency denominated loans in Naira. That is a different thing entirely. But the question is that some of those debtors are not in a position to pay down. So hopefully, with the recapitalization of the banks, some of the banks would now have a capital base that will make some of those loans to come below the single obligor limit. But what the central bank is saying that the banks should present their plans. And I know presentation of plans is a regular thing. Even in the recapitalization the banks are going through, they render updates to central bank on a monthly basis of their strategies to meet the new capital requirement. So such information are regularly required by central bank, which helps in its planning and helps it also in formulating its strategies on how to deal with the banking sector regulation and maintaining systemic, ensuring that the banking system remains vibrant and strong, maintaining systemic control over the financial services industry.
Mr. Chukwu, let's go to the first half of this year, which has come and gone. If you were to assign like a performance grade to the Nigerian economy in the first half, what would it be and why? And let me now attach this question. Did you see any kind of positive momentum around job creation in the first half of this year, around perhaps productivity, around industrial output?
Well, it may be difficult to say that. In terms of productivity, we saw some improvement in power supply. We must recognize that. We saw some improvement in power supply, which ordinarily should flush into the productivity of the real sector operators. We saw moderation in exchange rates to the end of the first quarter of this year. It spiked in April as a result of Donald Trump's policies. We also seen a moderation towards the end of the second half of, we also saw another moderation towards the end of the second half of the year, that's towards the end of June. So one would say that we saw a relatively stable exchange rate environment, apart from those few spikes we saw in April and early May. We saw a relatively stable exchange rate. That's a positive. We've seen inflation moderate, I think, to 2.97%. That's a positive. So in terms of employment, I think we may not have seen a material improvement in employment because the largest employer of labor is the agricultural sector, and we see so much of displacement of farming activities. So if we actually do the proper measurement of unemployment, you may actually see an uptick in unemployment as a result of disturbances to the agricultural sector. And then, if you look at the manufacturing sector, like I said, I should expect some improvement in cost of production, but demand is still weak. So we may not have seen so much improvement in turnover because household demand has actually remained weak as a result of erosion of purchasing power by inflation over the past couple of months.
If you are constructing perhaps a portfolio for the second half of this year, which we have entered, which sectors would you be overweight in? And you didn't answer my question on performance grade. I don't know if you answered and I lost that. You didn't answer my question on performance grade for first half, A to E.
No, I refuse to assign a grade until we have more clarity on it. But I think it's going to be the middle grade. It's average, yeah, something like that, average performance.
Okay, so you're putting together a portfolio for the second half. What will you be overweight on? What will be your bullish sectors?
My bullish sectors will include the oil and gas sector. We are seeing some improvement in crude production. We saw about 1.6 million, according to the data from government, about 1.6 million average crude production last month. So we bet on oil and gas sector, particularly the upstream oil and gas sector. I will bet on the financial services sector. They have been a bellwether. They've continued to outperform the market difficulties. I will bet on low value consumer goods sector. I think the construction industry will slow down because of rainy season. Then we should see an uptick towards the end of the year. But the third quarter of the year, we always see a reduction in construction activities as a result of heavy rains. So that's back of the envelope, my construction. But if you want more, you can actually reach out. Anybody wants more can reach out to me, either through you or through any of my channels.
Where should smart money go? And I'm still honing you on this because this is also a financial program. Where should smart money go to right now? What instruments, perhaps with high potential amid this uncertainty, where should it go? And I also find out that retail investors are often left behind, especially in this kind of high-level conversations that we have. In plain terms, an average Nigerian now, a middle income on average Nigerians, how should that person be thinking about investing today?
Well, there are two categories of investment that have outperformed inflation, are currently outperforming inflation. One is investment in federal government debt instruments, particularly treasury bills. Until the last auction where the treasury bills dropped below 20%, we've seen 364-day instruments above 22%. Effectively, it's more than 24%. Inflation is 22.97%. So you can outperform inflation by investing in federal government treasury bills. Assuming you cannot do that, you can buy from the secondary market through mutual funds, or you can buy fractional ownership through mutual funds. And then the other sector that has actually performed inflation is the real estate sector. Real estate sector, particularly in Lagos, has so much outperformed inflation figures that if you have the resources to invest in real estate sector, even for speculative purposes, you are not likely going to lose money. You will make good money.
Real estate, that could be a topic I could look at separately because there are some kind of investment REITs that is not necessarily that perhaps you also buy houses as well, because some people may understand the fact that is Mr. Chukwu telling us to go and buy a house of millions of naira when I don't have that. Can you just elaborate in a few seconds?
Yes, you can invest in real estate investment trust fund. And what that basically means is that you are investing in a conglomerate, in a collection of assets, investments that are made in real estate that have been fractionalized. So if you take a unit of a REIT. It could be that that unit of REIT is fractional hold in multiple real estate assets. So as those assets are appreciating, your REIT's value will also appreciate. So that's why I talked about the mutual funds.
Okay.
REIT is actually a mutual fund. So it's a fractional investment in an asset class.
Okay, finally, and as we end the program today, uh, what should Nigerians prioritize for the second half of this year? And what are your final thoughts as we have already started the second half, God keeping us alive? We would definitely in December say, okay, this was how we fared. What do you think? And perhaps, I don't know if I would talk to you again before MPC. MPC is in the next 7 working days. What is your view, very quickly?
Okay, what Nigerians should prioritize is they should focus on sustaining their household income. To sustain your household income, it simply means you have to, whatever surplus you have, if you have surplus, you have to invest in asset classes that will outperform inflation rate for those who have surpluses. For those who do not have surpluses, I ask them to broaden their income. One of the issues to look at, can I go into some level of farming, even if it's greenhouse farming, so you can sustain your family standard of living. That should be priority of Nigerians. And then in terms of what's my outlook for the MPC, I think they are likely going to hold rates. I'll be surprised if they move the rates. Inflationary pressures are moderated to 2.97%, but that has not been, that is still above their target inflation rate. GDP figure that we saw last year was at 3.84% fourth quarter of last year. That's still, if you don't disaggregate the GDP figure growth rate, you realize that apart from telecommunications grew about 5.47%, the financial services sector that grew, the major hitters in the economy, we are sluggish. Agriculture 1.19%, manufacturing 0.9%, and trade about 1. Manufacturing about 1.34%, trade about 0.9%. So we still don't have a strong growth as to lead for a further either contraction or loosening. I mean, either loosening or tightening.
Or tightening. So
I don't
it should be
I don't
flattish.
think again the exchange rate, yeah, we see some moderation, but I don't think it's yet to rule because
Okay.
we have not seen so much of increase in our foreign and our export earnings.
All right. Thank you very much, Mr. Chukwu, for your insights. As always, I'll speak to you soon. Don't dodge me whenever you come to Abuja. You know, I thought you were going to surprise me today, but
Just prepare Olubo soup. I will come.
okay. I can't guarantee you onubu, but I think I can guarantee you nsala soup. Onubu soup
Okay.
is not really one of my favorites. So, but nsala, anytime you're there.
Okay, no problem. I'm incentivized to come.
All right. Thank you very much, Johnson Chukwu, the Group MD and Chief Executive Officer at Cowry Asset Management, and we've been talking about a potpourri of economic and financial issues. That's the much we can take on today's edition of the program. For my team and I, have a wonderful day. I am Nancy Naji, be the best you can be, but the change that you want to see. Bye for now. Thank you for making it up to this minute watching the video. Thank you all. Don't forget to subscribe to our YouTube channel, Moneyline with Nancy TV. Like, follow all our other social media platforms where we keep you up to speed with fantastic interviews, as well as markets, personal finance, business, and economy information. This is the best place to be. I'll see you all again in the next video.